Hi guys, I'm AP. In this video, we are going to see about the fixed income. We are familiar with the job income and business income. A job income is nothing but we are working in a company and we are providing some value so that the company is paying for us. The business income is by selling a product or service, we are earning money. That is a business income. Okay, now let us see what is fixed income. A fixed income is a types of investment security that pays investor a fixed interest on a principal amount until maturity. At maturity, the principal amount and the interest will be paid back to the investors. Okay, a fixed income is nothing but we are going to invest a sum of money to an institution or a bank or a government or an individual corporate company. For that initial principal amount, they are going to pay certain interest for us in a fixed regular interval time. That is fixed income. Okay, now let us see what are the types of fixed income security. FDs, bonds, real estate and SGB. Okay, we are familiar with the investing in FD. If you have money and if you go to the bank and open an FD account, then the bank will offer a certain interest for the principal amount and a lock-in period up to say 5 years. It means the bank will provide 5% interest for the principal amount we are investing, and after 5 years the bank will repay the interest and our principal amount to us. Now let us consider the bank is offering a 5% of interest for our investment for 5 years. Now we are in the October 2023 and if we open a FD today, then at October 2024, we will get a 5% of interest for the principal amount. That is the fixed income. We know exactly that at a fixed interval of time, we are going to get the money. That is a fixed income. Okay. 5% of interest, it may seem little bit low because the investing in FD is relatively safer to the investing in other form of investment. It's because RBI insures all bank deposits up to 5 lakhs. Okay. The one thing we should keep in our mind that whichever security has a less risk, it will always offers us a less interest. Okay, we seen about the FD. If we take some extra risk, then we could earn a extra return from the investment. There comes bonds. Okay, the bond may be issued by governments or corporates to develop their businesses by getting money from the investors like institution and individual investors. With the help of the bond brokers, we can directly buy the public issue of the bond from the issuer itself. Even in the bond investing also, the government which will always provide us a less interest than compared to the corporate bond interest. It's because the default risk and the credit risk of the government is so low compared to the individual corporate companies. Okay, we seen that if fixed deposit offers us 5%, then the government bond may offers us 6 to 7%, and the corporate bond will offers us around 8 to 9%. Bond investment also, the corporates or the government which borrowing money from the investors, it will pay a regular interest fixed regular interval times, even monthly, quarterly or semi-annually, even annually. Okay. The third fixed income security we are going to see is a real estate investment. If we buy a home, we are living in that, then it doesn't make sense of putting money in our pocket. Rather than we rent it out the real estate so that we can get a rental income from the real estate investment at a fixed interval of time. So it's also called the fixed income security. Okay. The fourth one is sovereign gold bonds, that is SGB. Here the principal amount is pegged with the gold price. In future, if the gold price appreciates, then our principal amount also appreciates. Also the 2.5% of interest which we can get for our principal amount. Okay. In case of real estate and the SGB, we can also enjoy the appreciation of principal amount in a over period of time, but we cannot enjoy the appreciation of our principal amount in FDs and bonds. Okay. To conclude this video, the famous investor Graham suggests that one should always consider having a 25% of our money in the fixed income securities. If you are not familiar by picking the correct high grade bonds, then we should invest in the debt funds which is only invest in the AAA rated bonds. Okay. Okay. Thank you for watching. In the next video onwards, we are going to see about the elaborate way of investing in bonds from basic to advanced level. Still then, stay tuned. Thank you.